Okay, everybody, it's me, Gregory Mannarino. A lovely day, and we're going to talk about why. So, this is my post-market wrap-up on this Wednesday, May 6th, 2020. Stocks, well, for the most part, finished lower today. We will discuss why. Because generally, when we get an absolutely catastrophic piece of economic news, for example, 20.2 million more people losing their jobs, generally that's stock market positive in this twisted upside down environment. But stocks finished lower for another reason, and we're going to talk about why. So, to clarify, the Dow Jones Industrial Average finished down not even 1%, 0.91%. The S&P 500 finished down again, not even 0.75%, 0.7%. And the Nasdaq actually finished positive. So a mixed market. Tech is kind of taken off. Excuse me, my nose is itchy. Okay. Gold got hit. Silver got hit. Cryptocurrencies held their own for the most part. The 10-year yield also held its own. In fact, it's 0.7. It was higher than that earlier today. So why did the market sell off? Simple as simple can be. And you know exactly what I'm going to say if I think you understand these markets. It's crude oil. Crude oil dropped today. Not anything massive, but it was enough to pull the energy sector lower, the financial sector lower. The energy and the financial sectors, both of these, fell about 2.5% respectively. The market cannot hold gains if the energy sector and the financial sector are not propped up. Henceforth, why? Epic borrowing into oblivion is going to take place to prop up the situation. Henceforth, why they will find a way to prop up crude oil. And henceforth, why yesterday the president was tweeting, crude oil's higher. Fantastic. The president knows. He knows that he's got to get crude higher to lift the market. Again, we have no economy. We have 20.2 million more people losing their jobs here. And the market didn't free fall 1 or 2,000 points. No, we had fractional losses in the Dow, fractional losses in the S&P, and the Nasdaq finished positive. That's the game. You know the game. The game is twisted. The reason why stocks fell had nothing to do with 20.2 million people losing their jobs, because stocks were higher most of the day. We finished lower because of crude oil. Energy sector got sucked down. Financials got sucked down. And that's it. They're going to rig it. They must continue to rig the market. Yesterday, I explained, actually in the title of my video, I said the debt monster wants to be fed or will be fed. It is going to be fed. This is why we're borrowing cash like this, why the Treasury is going to the Fed, asking for trillions of dollars to prop this up. It's a disgusting, twisted thing, but that's where we are. Look, mass off the Richter scale, freaking super parabolic debt is the only thing keeping the stock market propped up. If this mechanism were not in place right now, the Dow Jones Industrial Average would be 6,000 or less. 6,000 or less. We are dead in the water. We're dead in the water with regard to our economy, with regard to industrial output, orders, The service sector is in recession. I mean, you can't make this stuff up. Meanwhile, the stock market up. I don't care. What do we do today? Nothing. We fell fractionally here and there. So what? This is a weak month as well. Sell in May and go away. It's a weak month. It doesn't mean stocks are going to go down. Doesn't mean stocks are going to go up. But in this environment where you got unbelievable debt acquisition, the Fed, two balance sheets are ballooning. The Fed is funneling dollars around the world. You know this, to the tune of trillions of dollars, but you can't know how much. You see, that is hidden in the dark money balance sheet. The dark money balance sheet is above your pay grade. It's above the pay grade of the President of the United States. The President, Donald Trump, cannot see the dark money balance sheet of the Federal Reserve. Did you know that? Well, you do now. No one is privy, no entity, no matter how powerful they are, no matter what office they hold, is privy to see the dark money balance sheet of the Federal Reserve. You're only allowed to see the one they put up on their website. That's for everyone, even you, Mr. President. You can't see the dark money balance sheet. So this should tell you the charade that is going on. It's absolutely in. I'll tell you something else about the charade that's going on. Those of you that do subscribe to the Trends Journal, I'm a regular writer now for the Trends Journal. I put out a really, I think, hard-hitting article in this latest Trends Journal. If you have not subscribed to the Trends Journal, I would suggest you do that. Anyway, look, let's sum this up. Let's put this together in a lovely little package. All right, stocks finished mixed today. The Dow was higher all day long until the last hour, where the Dow dropped, the S&P dropped, NASDAQ finished positive, like I said. Had nothing to do with 20.2 million people losing their jobs. No. This is about the energy sector dropping. This is about the financial sector dropping. Henceforth, the whole damn market drops with it. You understand? Crude oil. Crude oil is what? The lifeblood of the military-industrial complex. President Trump is very aware of this. Why yesterday? Crude oil is higher. Demand picking up. Yay! How does that help the middle class again if they pay more for energy? Oh, it doesn't. That's right. No. But it does prop up the stock market. Do you see how this works? Do you think this president or any president really works for you? Just right there, that sums it all up. If you're paying more for energy, does that make your life better? Of course not. Do you want to pay more for energy? I doubt it. All he wants to do is get cash moving in to crude oil, so we'll push up the energy sector. The financial sector is massively dependent on crude oil being higher. You know why? The investment banks have leveraged bets to the tune of trillions with regard to crude oil. The banks need and will get crude oil propped up. No matter what they got to do, it will get propped up one way or the other. All right, so anyway, 10-year yield, look where we got it, people, at 0.7. Unless we get a big sell-off, if we drop, if we see the 10-year yield drop, all right, then maybe we got problems with regard to this market, but I don't see it. The yield's going up. More easy money is coming. Like you have no idea. This $3 trillion that the Treasury is going to the Fed to borrow, that's just the first installment. You're going to see another $3 trillion, followed by $5 trillion, followed by $10 trillion. It's going to go up and up and up in a parabolic fashion. They have no other alternative. Why? Understand what's really happening here. It's the debt monster. The debt monster must be fed exponentially more. Every time they borrow more to feed it, it becomes more hungrier for more debt. So the 3 must go to 4. The 4 must go to 6. The 6 must go to 9. The 9 must go to 20. with regard to borrowing. So that's where we're at. So this should tell you again why you're seeing cryptocurrencies skyrocket like they are right now. Gold and silver should be exponentially higher, multiples higher than what we have. But it's a rigged game, and JP Morgan Chase is rigging the entire show. Like I said, the SEC knows about it. The commodities exchange knows about it. They don't care. They won't look at all. So just get used to the situation and use it to your advantage. People, I got you covered from every angle that you want to talk about. There's not one angle that we don't have covered together. I know you get that. I can't imagine, seriously, and if there is, I want to meet that person, another guy or girl out here covering this market like I am, every single aspect of it, so you can, instead of being sheared by the current situation, you can at least make it work for you, okay, not against you, because most people are being destroyed. Proof? How about 20.2 million people more lost their jobs? More. Okay, there's your proof for you. It's really in your face. All right, look, please share this video. Get it out there. I'm counting on you. And I'm very happy to say my newsletter is taking off like just like the parabolic debt. A lot of you are. It's free, 100%. So don't wait. Right now, in the description of this video, or go to traderschoice.net. Right there. It's very lovely. Sign up for my free newsletter. Ask anyone that has been getting my free newsletter if they think it's worth free and worth the information. Not one of them, I doubt it, would tell you that it's not. All right, look, I'm out of here. Love you. Get this video out there.